You know, they say the market is forward-looking, and it must have to be. Your stock's up like 95% over the last 12 months. For a year that you just reported full-year network revenues that were down 11.5%, you had a 22% decrease in content licensing revenues and a 7.5% decrease in subscription revenues. So what is the market looking towards that sends your stock up so much, given it wasn't a great year when it comes down to it?
Sure. The year was affected, of course, David, by some COVID circumstances, not surprisingly. What the market is seeing is that we set out to be the worldwide leader in targeted streaming, meaning that our services, if your viewers are not familiar with them, one is called Shudder. It operates in the horror area. Another is called Acorn, the British area. Another called All Black, Sundance Now, and AMC Plus. These services are designed to, and have proven to be, these services for fans to buy when they're buying other mainstream streaming services, Netflix, et cetera, and others. So we have a place in the market that is unique, it's sustainable, it's strong, and for fans of these services, it is their go-to place. We are number one in each of those categories.
Right. So you're giving them something that I guess they're not able to get on the broader, bigger services. You say it's sustainable. Why do you believe that's the case?
Well, we actually now have proof points, David. We've been at this for some time. An anecdote, the Golden Globe Awards are this weekend. We have a horror movie, La Llorona, that's up for a Golden Globe. We have a series called Creepshow from Stephen King that's killing it. We did a movie during COVID called The Nest that sort of among the fan base went sort of wild. And we are number one in the British area. We have a strong presence in the urban all black area. And we just launched AMC Plus several months ago. And that's a combination of those things with content from AMC, like the Walking Dead universe. Fear the Walking Dead, there are 3 different series within it now, growing to 5. Shows like Better Call Saul, Killing Eve. So we're really owning targeted streaming, if I may.
Yeah, well, you think you've defined the narrative, and you know it. It's like this company's too small to compete, too small to have leverage with the big distributors, too small to compete with the big streamers, and so you're sort of in this no man's land. You obviously say no, and I guess the market seems to agree with you, Josh.
No, it is not no man's land. It's the perfect land for our company. We're roughly a $3 billion company, David. We had run rate revenue from streaming at the beginning of the year of approximately $125 million. That's grown to $300 million. We're continuing strength right now in the beginning of the year. And if I may, and this is important, you'll understand it, we're doing it in harmony with our cable distributors.
Right.
So we have launched these services on Comcast, AT&T's DirecTV, Dish's Sling. So our, if I may, ecosystem is really working quite well, meaning the base part of our business that's linear channels is now in sort of great harmony with our streaming services that are growing at a very, very, very strong rate.
Yeah, they are.
Shepard Smith here. Thanks for watching CNBC on YouTube.